Good Monday morning from Yahoo Finance's New York City headquarters studios. I'm Yahoo Finance Executive Editor Brian Sazzi. You're watching PJT Partners at the New York Stock Exchange, ringing that opening bell. Capital Southwest getting things underway over at the Nasdaq. Government shutdown day 6, but that isn't stopping investors from getting prepared for the looming earnings season. That earnings season will kick off this week. Results out of Delta and Corona and Modelo beer maker Constellation Brands. It's also not stopping companies from pushing their businesses forward into 2026. Something very much on display in news today that Fifth Third is buying Cramer for $10.9 billion. Meanwhile, AMD striking a huge new deal with OpenAI, which may see OpenAI become a 10% shareholder of the chip giant. And Verizon, and this just broke moments ago, is bringing former PayPal CEO Dan Schulman out of semi-retirement to become its next CEO, replacing longtime CEO Hans Vestberg. Lots going on this morning, lots we're going to dig into here for you. All right, first, let's head down to the Nasdaq and check out Yahoo Finance senior reporter Ali Canal to see what's hot in the markets this morning. Ali, what's hot is all things AMD.
All things AMD, OpenAI, and shut down who? I mean, the market's clearly ignoring that. A lot of this news overshadowing some of the risks that we could see on the policy side. We have all three major indexes opening the day in the green on the heels of that AMD, OpenAI news. You're seeing the Dow up 0.5%. We have the Nasdaq is up 0.5%. The Dow is up around 60 points, and the S&P up 0.3%. We'll see if we can get yet another round of records for both the Dow and the S&P 500. And then if we take a look at the chip space to see how all these players are reacting to this news, you're going to see that AMD is up a whopping 34% at the open. Truly astonishing. If we take a look at the year-to-date gains, we are now up 85% thanks to the move that we're seeing today. But that is weighing on some of these major chip players like NVIDIA. Some investors questioning the dominance here with NVIDIA, which is a competitor to AMD. We're seeing shares down a little over 1%. Some other chip makers on the move. You have Broadcom down roughly 0.8%. We are seeing Micron up 4%, TSMC up the same amount, just around 3.5%. But let's not forget, Brian, that if we take a look on a market cap weighted basis, look at NVIDIA there, still up $4.5 trillion in market cap. So even though we're seeing some losses today, I don't think you can understate the importance of NVIDIA within this AI ecosystem.
Yeah, Ali, I don't think NVIDIA is going out of business on this AMD news, but nonetheless, a nice win for AMD. All right, here's what I'm tracking out of the gate today. Step aside, NVIDIA score big win for NVIDIA rival AMD. AMD and OpenAI revealed a multi-billion-dollar partnership to collaborate on AI data centers that will run, of course, on AMD chips. The deal will see OpenAI purchase 6 gigawatts worth of AMD chips starting next year. What's perhaps more interesting is that OpenAI will receive warrants for up to 160 million AMD shares, or roughly 10% of the company. AMD shares are ripping higher in early trading as a result. Crypto comeback. AMD shares aren't the only asset rallying hard to kick off the week. The price of Bitcoin is hovering around fresh records after hitting a high of $125,660 this weekend. Chatter is that the political dysfunction seen with the government shutdown is boosting the appeal of crypto, in part because it erodes trust in the US dollar. And fire up another earnings season. Earnings season officially begins this week. Results out of Delta and Constellation Brands. Something to watch is that analysts expect Magnificent 7 earnings growth will have decelerated from 28% to 14% in the third quarter. Let's see how investors digest that possibility for these hot names. Meanwhile, earnings season will coincide with the next Fed meeting later this month, and lingering concerns Trump tariffs will put us, the U.S., into a recession in 2026. Here's Mad Money host Jim Cramer. He told me in a new episode of the Opening Bid Unfiltered podcast what he thinks about Powell and the economy.
I think they're fine. I think that Jay Powell's doing a great job. I don't know how he does it with cartoons written, "You're fired." Jay is an amazing guy. And I met Jay years and years and years ago, just at a party. And I said, this guy is like really smart.
Recession next year or no?
No, you kidding me? I'm not worried about a boom over here.
Jim, looking for a boom. Love seeing Jim. You can check out that episode now on the Yahoo Finance homepage. Here are my opening bid roundtable. Miramar Capital co-founder and senior portfolio manager Max Wasserman, and Yahoo Finance senior reporters Ali Canal and Inez Ferre. Good to see you all. Max, coming out of the block here with you. This OpenAI AMD news, AMD shares ripping higher as a result. Zoom out here for us. Doesn't this send an ultimate signal that if you think we are in an AI bubble, maybe this isn't that isn't actually happening. If investors are willing to pay up more for AMD on news like this, doesn't it send a message that perhaps the AI trade is not done yet?
Good morning. And yes, I don't think we're in a bubble yet. The multiples aren't signaling like you have in 2000, where the S&P was roughly around 34 times earnings. I mean, you're still roughly 25 to 27 times. But yeah, it's getting lofty. I mean, I think the AMD news tells you that there's an appetite here. And as long as you have the Fed in the background, I think, willing to cut interest rates and administration wanting to cut interest rates, there's no reason for this appetite to slow down in the short term. I do think if earnings start to show a peak and a deacceleration in growth, people will start re-examining. But you can see by the action in the market right now, the appetite is strong. And I think it will remain strong until that object hit something, until something changes people's point of view. But no, I don't think we've peaked just yet, but we are very close.
It is interesting, Inez, to see so many of these new tie-ups in the AI infrastructure space. You have AI, you have AMD now with OpenAI, you have NVIDIA linking up with Intel, the government with Intel. I mean, there's so much activity going on right now.
Yeah, and there's also concerns about the circular sort of structure to everything, to all these companies that are linking up together in these ties. But I just want to underscore, I mean, what we're seeing with NVIDIA right now, 38%, up 38% at the open, adding $101 billion in market value. I mean, this is definitely the sort of shot in the arm that NVIDIA needed, the boost that NVIDIA needed as it competes in this AI chip space as well. And just to underscore that, this is the second largest rise for AMD in the last 40 years, the second largest one-day rise. But certainly this underscores the sort of the AI investment, the CapEx that is being spent, the amount of investment in AI that is driving really the economy forward.
And Ali, of course, it's important to see OpenAI placing orders for AI AMD chips for next year. That I think goes a long way in debunking this notion that we are near peak AI CapEx. So push that aside. But I think it's a very important signal, perhaps more so in this news with AMD and OpenAI, that OpenAI is willing to take a 10% stake at AMD. I just think, OpenAI is not led by dummies. If they thought AMD was near some form of profit margin peak, they wouldn't want a 10% stake in the company.
Yeah, that's a good point, Brian. And we're in this moment, you were just talking about the circular movement of everything, where these AI giants are essentially funding each other's growth. I mean, OpenAI is nowhere near profitable yet. They're spending aggressively, but with that stake, there is maybe that hope that they're going to reach that profitability inflection sooner than later. And for OpenAI, they're really just hedging their bets, moving beyond a name like NVIDIA. We were talking earlier about the potential bubble risks, and we have heard that expressed from some executives, even some Wall Street analysts. For example, Jeff Bezos, Amazon CEO, he was at an Italian tech conference last week, and he talked about this, and he said we could be entering an industrial bubble, but ultimately that's going to be a good thing for society. We also heard from Goldman Sachs CEO David Solomon, who was a little less optimistic. He said that he expects growth over the next year, but still there is a possibility that some of this capital won't deliver returns, and a market drawdown in the next 12 to 24 months, quote, wouldn't be surprising. And then you're seeing other analysts like Evercore ISI, for example, boosting their expectations that we could see a bubble next year that could fuel a melt up in equities, and just really goes to show how concentrated we still remain in this market. So the profitability is really the question mark here. When are we going to start to see these returns? And are investors willing to be patient enough before any potential bubble pops?
Max, I know what's going to happen today. People are going to wake up, they're going to see this AMD news, they're going to buy some AMD as it's going up. They're going to also at the same time probably buy more NVIDIA that they've been holding for the past 2 years. Level set for us. What is the course of action when you're seeing all these AI stocks essentially go up and to the right almost every day, and they're all doing it in unison?
Well, I mean, investors should take a note. I mean, look what just happened to Oracle. Oracle did a huge spike on similar type of news, and the stock rallied like 40%, and now it came down about 10%. Don't chase this here. I mean, I think your person said it the best. I mean, they're funding each other. That should make people a little nervous here. And the money is just going around in circle from these companies to each other. So any monkey wrench in that and the show is over. The companies will do well, but the valuations will eventually come down. I can't tell you when it's going to happen, but when you see each other funding each other, that concerns you. When you look historically at multiples and valuations and growth, they are valuing these companies at growth in perpetuity, and we all know that doesn't happen. Long term, yeah, these are great companies. We have investments in them. But again, these multiples and getting in this day, you're taking such a risk, and it's asymmetrical at this point. You're in the 8th, 9th inning of this game. Don't chase it here. I think people are going to be very surprised because sentiment can change in a moment, and it will be like catching a falling knife.
Will earnings season, Max, change that sentiment? Will that be the rude awakening that says to investors, you know what, maybe I shouldn't be paying 90 times forward earnings for this company or a company?
Only if the earnings are surprisingly lower. If it's just about the same or slight less, I think there's too much liquidity in this market yet. And with the Fed looking to add more liquidity to the market, I think it's going to need more. I think you're going to need some kind of comment from a multiple set of sources that says things are slowing down the rate of growth. So I'm not expecting this earnings to throw a monkey wrench in it. But yes, I'm expecting the next couple of earnings will throw a reevaluation into these companies. Great companies, but this valuation is getting a little absurd at this moment. And all you're doing, it seems like you're going to Vegas here and you're rolling dice. Good companies, but long term, the valuation's discounting many years in advance. And we all know there can be a monkey wrench. So I caution investors, have a diversified portfolio of these. Don't be so concentrated. I mean, we are in the 8th inning in valuations.
Inez, you track a lot of earnings. What are you looking for as these results start to trickle in this week?
I'm looking for commentary on the rate of growth.
Mm-hmm. Inez, how about you?
Same thing. I mean, it's going to be investments, it's going to be returns, and it's going to be looking forward into 2026. And so far, Wall Street doesn't see this rally sort of letting up. Yes, nothing goes straight up and to the right, but they definitely see the Fed easing being very, and the CapEx that's spent in AI being very stimulative to the economy.
Ali, maybe whatever earnings season does or doesn't do, maybe it doesn't even matter. I mean, the Fed is probably going to come out here end of this month, cut rates again, and that is going to support higher stock prices.
Yeah, right now the market is pricing in 2 more Fed rate cuts before the end of the year, and we've been hearing across the board from Wall Street strategists that that is helping fuel the recent rally that we've seen. But I still think earnings are incredibly important, and after the success that we saw in Q2, Q3 earnings season, I mean, I think you could say there is another high bar to cross. We had JP Morgan, Goldman Sachs, they're optimistic on this earnings season. Goldman Sachs saying that the results should come in better than expected due to the tailwinds from AI, along with this resilient economy that we've seen in the face of multiple headwinds. We keep talking about tariffs making their way through the economy, how that could impact margins, but we haven't really seen that reflected in these results. We see a lot of companies absorbing costs, not necessarily passing those on to consumers. Could that change this earnings season? Could we get some more commentary about that? That's something that I'm going to be watching closely. Goldman Sachs strategist David Kostin, he did say that estimates are too conservative in light of the economic data during the quarter. So again, that resilient economy narrative. S&P profits are expected to rise 7.2% year over year. Now that is the smallest gain in 2 years, but again, this resiliency in the face of tariffs and increased inflation. And then you had Morgan Stanley strategist Michael Wilson adding that a modest reflation next year could restore positive operating leverage, something that we haven't seen since 2021. So I think heading into this earnings season, it's still all about the AI companies. Are they showing that growth, showing that demand? But also, what about the other companies, the other 493? How are they doing in weathering some of the volatility that was introduced in the spring? That's something that investors are also going to be watching closely.
Well said, Ali. Big thanks to my opening bid roundtable, Max Wasserman, Ali Canal, and Inez Ferre. Appreciate it. All right, will AI ruin software companies? That's the vibe swirling around a lot of software stocks right now. We have ZoomInfo's founder and CEO Henry Schuck in the house for my Power Player segment. I suspect Henry will have something to say on the AI crushing software narrative. We'll be right back. Welcome back to Opening Bid. Wall Street coverage initiations on blockchain play Figure trickling in after the company's mid-September IPO. Bernstein is out with this today, initiating coverage of Figure with an outperform rating and a $54 price target, which assumes about 35% upside from current levels. Says Bernstein analyst, quote, just as stablecoins tokenize the dollar and drive instant payments without any centralized intermediary, tokenized loans digitize and disintermediate lending markets. Wow, mouthful there for these guys. Figure is a market leader in credit tokenization with a 75% market share in tokenized private credit. And if you have no idea what I just said, just get at me at X on Brian Sozzi and I'll tell you what I said. At $41 currently, Figure stock is trading above its $36 opening price on its September 11th IPO day. Interesting company. Software stocks have had a rough go of it lately. Experts I have talked to have pinned the blame on this view that AI will derail many software companies and in some cases render them totally obsolete. While on the extreme side, the concerns have weighed on valuation multiples for software companies. Software companies are not taking that threat of AI sitting down, though. Many are aggressively reinventing their businesses to benefit from AI. One of those names includes ZoomInfo, which is full steam ahead on its AI efforts. Let's talk more about all this with ZoomInfo founder and CEO Henry Schuck. Henry, good to see you as always, sir. Well, let's start with some of the things you are working with on AI. I know you have a lot of new initiatives that are starting to hit really now and into the next year.
Yeah, great. Thank you for having me, Brian. I think that the big thing here is that people are rightfully nervous about AI initiatives within companies creating any sort of real return for those companies. There's this MIT study that was out about a month ago or a couple months ago that said 95% of AI initiatives that are taking place inside of a company show no measurable ROI for those companies. And that is a very obvious thing that we actually see in go-to-market organizations, where we think this is actually the worst across all departments within a corporation, is that inside of sales and marketing organizations, they brought on a number of technologies that are supposed to give them AI productivity and opportunities to reduce staff and get more out of their existing staff and generate more leads. And they're not actually turning into any real ROI within those departments. And what we've learned is without a contextual learning base and contextual data, that just slapping a wrapper over a ChatGPT or a Claude doesn't give you any sort of value for the solutions that you're delivering. And over the last couple of years, there have been a number of these AI startups that have come into the go-to-market space. They've built products that are a wrapper around a simple OpenAI chatbot, and then they haven't created value within those companies. And so we've spent a lot of time working on how do we deliver to our customers a contextual data service that understands everything about them, everything about the companies they sell to. And then once you have that together, how do you build AI on top of that? We're releasing today our Copilot Workspaces product that does exactly that, builds a contextual data service, learns from users' interactions, has domain expertise, and we think that's far differentiated from just slapping a wrapper on an OpenAI chat interface.
Henry, every day I wake up and I see some more news on OpenAI, and I think they're having a developer conference today or early tomorrow. It looks like they want to get more in the enterprise space. You know, as a founder of your company, do you worry about what OpenAI is doing?
Look, OpenAI is a partner of ZoomInfo's. We use OpenAI, we use Anthropic. We think that there is a real opportunity to leverage these AI technologies to drive real productivity inside of go-to-market organizations. But we also realize that you can't do that unless you have real context and you're learning from your customers and your users' interactions, and that learning is domain specific. And so for us, we're really learning. We have years of learning from what account executives, account managers, sales development reps inside of companies are doing every day, how their interactions turn into more opportunity for their business, how some interactions are wasteful. And then we can use all of that learning on top of the AI and the context data services that we're providing our customers to allow them to be more precise, more predictable, and then drive productivity within those organizations. But look, forever, companies have had the option of building software in-house. instead of going out to a software vendor, they could always build their own software in-house. That is expensive. They have to maintain it. They have to maintain access and security and governance. And when you have limited capital resources, you're almost always better putting those resources to your product, to your customers, to driving better customer experiences than trying to build something that a software vendor is best in class at and can deliver for you with AI layered into that.
You and I have talked about this in the past, Henry. Your company has a ton of cash. You've bought back a lot of stock. But just given how fast AI is moving, the pace of change, the development rate, are you inclined to maybe purchase less stock and you're going to have to invest more to keep the platform competitive?
Look, I think I feel really good about our investment levels in our product and R&D across our industry. We are the largest investor in R&D for go-to-market teams, so I feel very good about that level of investment. We've continuously invested more in our product and our R&D efforts over the last number of years. But when we feel like our stock price is below the intrinsic value of the business, we're also going to be aggressive buyers of our shares.
You mentioned Copilot and what you're working on there, Henry. What will that do for your platform? And do you upcharge your customers for using that?
Yeah, so we are monetizing a migration from our sort of legacy platforms that are not AI native into our Copilot Workspaces platform that is AI native and is surrounded by AI productivity tools, the ability to build decks for your clients, build account plans, automatically update your CRM system, prioritize and score your accounts. And so there's a number of additional functionality that we've been able to release by leveraging AI in our development processes, by leveraging AI to deliver product to our customers. And so we are monetizing that migration as our customers come off legacy non-AI products and onto our AI products.
This is an interesting time in the economy. Large companies, they've handled these tariffs pretty well, but a lot of the medium-sized and smaller companies that I talk to, Henry, they're really starting to struggle. From your vantage point, all the data you get, what is the vibe on the U.S. economy going into year end?
It's actually like I feel the vibe is pretty positive, more positive than I've seen, outside of the April tariff announcements. It's more positive than really I've seen it in the last sort of 2 to 3 years. Our customers want to lean into new technologies that drive productivity. I think they're a little bit shell-shocked by the changes in the traffic to their websites that AI has driven, and they're trying to figure out solutions out of that. One interesting thing that we've seen, Brian, is over the last 2-3 years, companies have been reducing the number of salespeople that they've had on their teams. And most recently, what I'm hearing from customers is that they're stepping on the gas again on hiring new salespeople, primarily because now these AI overviews from Google and the LLMs have reduced traffic to their websites, and they have to generate demand somehow. And so they're leaning back in onto the sales organizations to generate that demand. That's something that I haven't seen for the last 3 years. And so I think they're pretty bullish right now.
Lastly, Henry, if we're having this conversation 1 year from now, what technology will be on your platform that you don't have today?
What technology will be on our platform? We are going to continuously automate out the work that account executives and account managers are doing. We look at the universe as here are all the jobs that account executives do inside of a company, salespeople. Here are all the jobs account managers do, all the jobs SDRs do. And we want to automate out as much of that as possible so that we can continue pushing sales reps and account managers to the highest value work that they're doing. I would tell you we're kind of 30 to 40% of the way there. And over the next year, we'll probably push another 30 to 40%. And so we've automated out most of the tedious human friction out of the sales process and let the humans in organizations focus on the higher value activities.
You're not automating yourself out, Henry, right? I mean, come on, man.
Oh, maybe at some point, but not in the next year.
All right. ZoomInfo founder and CEO Henry Schuck, always good to see you. Have a great week. I'll talk to you soon.
Awesome. Thank you, Brian.
All right. Coming up, Yahoo Finance's Market Catalyst. We bring you the news behind the market news for the trading day you won't want to miss. Lots going on in the markets today.